Welcome to You and Your Money. I'm Jim Zahansky, Senior Managing Partner and Chief Strategist at WHC Strategic Wealth Advisors. Let's dive into today's show.
Let's talk about how we got here, Jim. Despite all the scary headlines that we've seen, the stock market seems to keep climbing higher, as you mentioned. Help us understand what's been happening.
There's so much happening. I mean, if you're one of the people that has the news on all the time, right? You're listening to the things happening. So geopolitically, and we'll talk a little bit more, there's been quite a bit happening on that end across the globe. There's been the tariffs that have happened. We, of course, have a U.S. administration, a new U.S. administration. It's moved very quickly with new policies, from the tax side to the tariff side, and as we look forward, to the budget side. So there's been a fast-moving policy changes across the U.S. There's been geopolitical backdrop that has been not as strong. And, clearly, despite these sorts of things, the markets have performed well and shown resiliency.
Yeah, the S&P 500, for example, going strong.
Yeah, going strong. The bond ag going strong. And again, if we were here in April, we'd have a little bit different story, which always tells the investor that's listening, be patient, stay on strategy, and make good choices.
Tariffs, again, a key word, and you included it there. Drill down a little bit on that.
Yeah, if you thought of what has driven, we use the S&P 500 as a marker of an index showing, macro performance or larger performance of companies in the U.S. What you're seeing is that tariffs have been sort of the biggest driver of the ebb and flow or the peaks and valleys of the S&P 500. In essence, there's a lot of concern about tariffs because historically, when these have been enacted, there's retaliation by other countries, and really the fear with tariffs is that the prices rise for you and me, Gary, and all your listeners, right? That this sort of tax on goods coming into the United States that we're buying essentially gets passed on to us. And there's some evidence of that starting to happen a bit more recently. And that's sort of the concern. But what this particular administration has done is taken the opportunity to negotiate with other countries while increasing revenue. We'll be watching this very closely because this will be a price dynamic in which we have to watch, because if consumers bear all of the brunt of that, it could hurt consumption. So that's sort of the concern there. But clearly, tariffs are raising quite a bit of revenue for the U.S. government.
How about inflation?
And that's right, exactly right. So it stayed in inflation. This is one we've been watching since COVID, right? I mean, this has sort of been, hey, interest rates are really, high. First they were low, then they were high. All monetary policy related to what was happening in the world. And as we sat here in 2022, inflation had the highest spike ever. Now here in 2025, we've seen the Federal Reserve starting to loosen interest rates, all related to sort of a relaxing inflation. And so inflation seems to have stabilized, although there has been some short-term impact in the most recent July readout related to tariffs. So, we saw a slight escalation on core inflation to where we'd want to be. And the Fed has targeted 2% inflation. We believe it'll probably settle somewhere in the 2s to 3. So we'll see. Maybe the 3 is the new 2.
How about the big, beautiful bill? What are your thoughts on that?
Yeah, I love the name. And is it beautiful? That will be determined. But clearly for your listeners and for all of us, the one big, beautiful bill, in essence, is a stimulative economic tool used by this administration to ensure that all of us were, in essence, locked in on a lower tax base. It provides credits to corporations with all the intent to grow the job market and increase U.S. investment by corporations in the U.S. And so, I think, we'll talk about the downside of the OBBA, perhaps, is potentially adding to the deficit. That said, we're not, there are a number of other factors, is that this administration is betting that the growth the OBBA gives in gross domestic product will outpace the growth of the deficit. And therefore, in essence, if that happens, you'll still have strong economic growth over time. And what's driving that growth is the investment in technology and artificial intelligence, giving us all higher productivity.
Man, there's a lot to absorb there. There's
Yeah,
a lot going on, a lot of
there is.
moving parts, but that's what you do.
Yeah.
You analyze all of those moving parts that we talked about, and try to keep us on track. Is basically what you're doing here, right?
We're trying. I mean, the team actually yesterday met. We had a discussion mostly about, where the world economy was, global economy was, what was driving, and it was an interesting outcome of technology this year is obviously driving a lot of the markets. The bet is that AI, if adopted well, increases our overall productivity across the globe, worker productivity, right? You, me, everybody listening that's working in some way gets an enhancement from artificial intelligence. And if adopted well, productivity increases, and therefore it grows gross domestic product at a higher rate. We'll see if that happens. I mean, these things don't happen in terms of days and months. They happen in terms of years.
So again, for listeners who may be feeling anxious about all the headlines and all the things happening in the world, what's your advice? Calm us down. Go ahead.
This is a tough one for people. I mean, we sit across from a range of clients, right?
Yeah.
And some of them may be on the right side of the political spectrum, some may be on the left, some may be in the middle. The challenge, based on generations, tends to be what radio, where are you getting your news? Is it objective?
Yeah.
And we say turn it off.
Yeah.
Because if you took less risk in April because you were worried about tariffs in the markets, you lost.
Yeah.
So how do you, because it's come back up and we have growth. So you might have been down in April. That's the whole point to being a strategic investor, and how we would coach clients as a team is make sure during those downtimes you have enough liquidity to bear it out, stay in a strategy, and you win long term.
For more information regarding wealth management and customized financial planning with WHZ Strategic Wealth Advisors, please visit WHZwealth.com. WHZ Strategic Wealth Advisors offer securities and advisory services through Commonwealth Financial Network, member FINRA SIPC, a registered investment advisor. Fixed insurance products and services offered through CES Insurance Agency. They practice at 697 Pomfret Street, Pomfret Center, Connecticut 06259, and 392A Marrow Road, Tolland, Connecticut 06084. They can be reached at 860-928-2341. WHZ Strategic Wealth Advisors do not provide legal or tax advice. The tenured financial services team strives to support clients in achieving their financial life goals while providing absolute confidence and unwavering partnership for life.